In general, equity compensation, it's just a way for the company to say, hey, I want you to participate in the success of the company. It's a way for the company to say, hey, one, I want you to stick around because there's going to be vesting schedules tied to them. You participating in the success of the company means that the stock price goes up, your equity compensation is worth more.
There's so many planning issues around that with some very specific tax implications to all of those decisions. Those implications are probably beyond the scope of what we're going to talk about today, but we really want to encourage people, if you're in this position for the first time, is to do some thinking and planning ahead of time so that you're not rushed in making decisions about how to handle your equity compensation. So all of those things, restricted stock units, when they vest, have tax implications. Exercising options has different kinds of tax implications depending on what you do, and getting ahead of that and planning for it is part of your job as being a tech employee or any employee with stock.
Yeah, exactly. As far as all the different things that go into like the different planning issues, one of the biggest ones, like taxes is definitely a big one. Taxes, because it can be complicated. With RSUs, for example, the main one with that is just understanding that what happens when that money is considered income to you. Yeah, just real quick with RSUs, the way that I frame it with people is that, okay, whenever your RSUs vest, so April 8th, your RSUs vested. So whatever that value of that stock on that day, it's like you just got a cash bonus in that amount. So say your RSUs are worth $10,000, for example. It's a great RSU bonus, right? And so that like you get a $10,000 cash bonus, they're going to withhold for taxes, and then the remainder would hit your checking account. So let's say there's $7,000 that hit your checking account. And then it's having that decision of, okay, if you had $7,000 that hit your checking account, would you take that $7,000, go to E-Trade or whatever platform and buy your company stock with all of that money, right? Most people say no. Doing that exercise just helps you understand what you should do with those RSUs. Should you hold on to them or should you sell them? And then, just like what I was saying with the tax perspective of just understanding how much is being withheld for taxes, because if you're in a higher tax bracket, then they actually might not be withholding enough. And so a lot of people with RSU get hit with a pretty big tax bill. It can be ugly. That's just an example of, hey, I didn't completely understand this equity that I had. Let's trying to plan around that and avoid that.
Yeah. And so for those people who are listening, who are saying to themselves, gosh, I really haven't been thinking about this. One of the first things they can do with their financial planner or their financial wellness program at work, if they have one, is to figure out their entire tax withholding for the year, taking into account that they might have some equity events during the year that they are going to have to pay some higher taxes on.